What you heard about inheritance tax?
It's tax when the person is died.
Yeah.
The property is tax.
Yeah, when the person is died, see there are conditions are there. There are some exempt items are there. There are some potential exempt items are there. Potential exempt transfers are there. There are lifetime chargeable lifetime tax is there. Okay, there are three different conditions are there, and subsequently you will going to come across how it has, what are the exempted items, what are the non-exempted items. Is that how much a person can give and how much, what is the limit. Okay, only things, if you take the things, this is one question, it will come either in section A or section B or in section C. Is that inheritance tax? It may be come in all three sections. Okay, what it says, identify the persons who are chargeable, understand the meaning of transfer of value and chargeable transfer and potential exempt transfers. Okay, it looks big words, but actually it is not like that. What is the demonstrate the diminution? When the moment you are giving the gift, you are giving anything, definitely the value of the asset will decrease. Okay, now if you are giving a gift, there is a 7 year accumulation, 7 year rule is there. If the person lives for 7 years, what is the condition? If the person will die within 7 years of the giving the conditions, what is condition? Basically it is, see, it is between spouse, it is between parents and children, it is between grandparents and grandchildren. Those things will be tested here. Okay, those two will, what are the implications of lifetime transfers? Is that what are the implications and what are the relevant liabilities? It is not that much clear. Understand and compute the tax liability on the death estate, when somebody will die, and how we have to pay all the expenses on behalf of that person, funeral expenses also, then things will be given. We are not going to anything, just we are identifying the liability and we are charging the tax liability on those assets. Understand how and apply transfer of any unused NRB, okay, nil rate band, it in between spouses. Understand, apply the residence nil rate band available when residential property is inherited. Is a residential property, if you are taking, what is the nil rate band, how it is going to be distributed. Okay, understand the following exemptions. This is simple. This only thing is you have to, what are the, how much, there is a rule of 250. What is the marriage? If it is a father, how much you have to give, grandfather, how much you have to give, if you have a friend, how much you have to give. They will test this. Okay, you have a annual gift exemptions, normal expenditure, and girls in consideration of marriage. This they have added, girls between spouse, sorry, gifts in gifts in consideration of marriage and gifts between spouses. Understand basic inheritance tax planning and who is responsible for payment of inheritance tax. And last but not the least, as simple as that, there is a, what are the dates of payment of inheritance tax. Okay, now is it what it says? See, inheritance tax is a very important topic. Okay, it's a very important topic. You can test it in both section A and section B. In your tax, inheritance could also be focus of 10-mark question in section C. Is it? The most inheritance is just read this one.
Most inheritance tax is collected on the death of the individual, measuring the value of the individual's death estate. However, inheritance tax only applied on the death. It will be easy to avoid by the giving away
Next. Now, what they are saying, see, slowly understand the things. We will spend good time on this, okay? Inheritance tax is charged on transfer of value, chargeable property by a, see, it is charged on a transfer of value of chargeable property by a chargeable person. This is, everything is one sentence. Okay, it is one sentence. Don't say their points. Inheritance tax is charged on a transfer of value, comma, of chargeable property, comma, by a chargeable person. A charge to inheritance tax arises. When it will arises? When a person is died. Lifetime gifts to individuals when the donor dies within 7 years. Okay, when a donor dies, with means he has given, X is given and he is dead. Okay, within 7, on lifetime gifts into trust, which are taxed at the date of gift. See, the concept is like this. People will do this. See, in UK, the concept, in other part of the world, the concept is like this. If they have the property, they will give it to the trust. Trust is manage the property on behalf of the children, and when the children will grown up, the trust will transfer the property to the children's name. Okay, that is going to be happen. If that is the happening, how it has to be treated? That is the lifetime gifts. Okay, lifetime gifts into trust.
And the second one, lifetime gifts
to individuals.
what that mean? Now, for
See.
example, the person who is dying, given to someone gift.
If X is giving to Y, okay, X is giving to Y. See, if he is alive, if he is alive after 7 years, okay, if it is alive after 7 years, no tax. But if X is going to will die before 7 years, okay, before 7 years, then there is a tax. It is going to be it will be taxed. If he is going, if see, assume if he is given a gift in 2018 and he will die in 2023, he died in 2023, you have to calculate how many years are there. If it is less than 7 years, then it is taxable. It is more than 7 years, it is not taxable. Simple.
And taxable after he died.
After he died only. Whatever the gifts he has given. Is it right? Whatever the gifts he has given, on that it is applicable.
And if more than 7 years, so
It
no
is
tax?
it is no tax. If he has given the gift and 7 years has been passed and he is still alive,
So and then, for example, 8 years he died.
it will not applicable.
And for the trust is full time. So no limit of years.
Yes. On lifetime gifts into the which are taxed at the date of gift. The moment you are giving gift, it will be charged. It will be taxed immediately.
Even he still not died.
Yeah. Even is alive.
Yes.
Okay, even is alive. Slowly, don't worry. The donor is the person who makes the transfer, and the receipt is called as donor. What is the transfer is value? Just read this one.
With the donor who now is with the person who is died, right?
Yes. Yes.
And the donee which
Who received?
the children in the family.
Who receives?
Okay.
Like a lessor and lessee.
Yes.
Okay, like a lessor and lessee.
Transfer value is the gift of any asset donor assets. Okay. To be treated as the transfer value, transfer must be gratuitous. This disposition. This basically means the gift. What that mean?
To be treated as a transfer of value, the transfer value means a gracious disposition. Means you are giving with all, you are not expecting back. Okay, if you are if you are transferring to somebody else, we are means we are with the intention that it is one you are giving halas and you are forgetting about it. Don't expect anything and don't say that you have to give me back after 1 year, 2 years, 3 years. Gracious, gracious means with all kind,
With all?
with all good intention that I am giving a gift. See, you are giving a gift to somebody else. When you are giving a gift to somebody else, transfer the thing, you expect something in return?
No.
Ah.
Okay. So with full responsibility, for example, full responsibility, for example, of that gift. You give him, he's like a winner of that gift.
Yes.
Okay.
Okay. Continue.
Okay. The bad business deal with therefore not be able to earn tax. A bad business deal with therefore not be liable to earn tax. What that means? Bad business.
A bad business deal will therefore not be liable to inheritance tax, even though there is a fall in value of the asset, and it was not the donor's intention to give anything. See, what happens is that I have some asset, okay? I have some asset. The value of asset is going to decrease. Buildings, assume something else. Any asset, the value is decreasing. What I will do? I will do that. Yes. Why I have to waste? Some people are there now that okay, they give this as a gift. See, it is there in my dear, in our Islam is also there now. When you are giving to somebody else, you have to give good things. You should not give bad things.
Yes.
Is it? You have to give. If you are giving something, food also, if you are giving to somebody else, if you are giving, you have to give good food, better food, best food. Is it right? You should not.
So now if they giving the bad business, so it's not applicable to tax.
Means no. Means you should not give something rotten, okay, something bad, something old building, you should not give as a tax, as a gift. Means if you are giving the gift, what they say that if you are giving the gift should be in good condition. Understand
So
well?
what happened? So what happened if they gift is all for example bad business? What happened then? They said a bad business deal with the therefore not being able to the inheritance tax. So no tax, right? If
Yes,
they give
yes. Even though there is a fall in value of the asset, and it was not the donor's intention to give anything away, means it is not liable to inheritance tax. Okay, see, it will not be considered for inheritance tax. If it is, see, you are giving with a bad intention, then what is the purpose of giving the gift? Is that what is the?
that's why it's considered to inheritance tax.
Huh. But take my word, I have done so many times. After this you will not come across this sentence. Okay, this is limited to here only. Okay, it will not come again. Okay, it will not come again. You can test once till the examination is over. Okay.
Okay.
To calculate the transfer of value IHT, the loss to donor principle is used. Definitely, if you are giving anything in gift, definitely what will happen? The value of your wealth will decrease. Okay,
Yes.
the value of your wealth will decrease. The loss
Yes.
to the donor is the difference between the value before and after the gift, and this is the starting point of IHT, lifetime IHT value. Okay, what value of the gift before, value of the estate after gift, whatever the difference, that is the diminution. Okay, diminution. They will not say loss in value. Okay, diminution in value means decrease in value.
Diminution is loss.
Decrease in value. Sorry,
Yes.
is it
Diminution
right?
is a decrease in value.
Decrease in value. The loss to the donor is in the open market
Is
value.
value of the estate before a gift and the value of the estate after gift. So, for example, if the gift is what we said, for example, it's house, for example.
Okay.
So, the value of what the value would change?
See, assume value of the asset before gift is 10,000. Okay, value of the estate after gift is going to be 4,000. How much is value you will have after giving the gift? What will be your wealth? You have a wealth of 10,000. Okay, you have estate of 10,000. You are giving a simple, my dear, simple mathematics. That's all. Simple. You have wealth of 10,000. You have given a gift of 4,000. How much will be your wealth?
So that means the net value of gift, the value of property, right?
Ah,
Because the gift already is gone, and the rest, the balance will be the value, right?
yes.
Okay. Okay, the loss.
Okay.
Okay.
Next.
The loss. The loss of general is usually open market value of the assets gifted. The loss of general is usually open market value of the assets gifted. What does that mean? The loss of general.
Is usually, see, what when you are doing the thing, it is the market value. Is it right? It is the, what is the market value is going to be there. That value is going to be identified. That value is going to be identified. Understand my point? Whatever the market value, that market value will be taken into consideration. Okay, whatever is the market value, that market value will be taken into consideration. Are you clear about this?
Okay.
Next.
However, the subsequent transfer value from the donor point of view is not the same as the value of the asset received from the donor point of view. Okay. That is okay. The different the circumstances will be different. The point of view of donor and donor.
Yes, the from the donor's point of view, is not the same as the value of asset received from the donors. This is a common gift with, this is the most common gift with the unquoted shares, when a controlling shareholding from which a partial gift can be made. What does it mean?
What?
What does it mean?
What does it mean again?
However, in some circumstances, the transfer of value from the donor's point of view is not the same as the value of the asset received. Means from the donor's point. Means you are giving, X is the donor. Okay, donor is going to give to donee, Donor is going to say that the worth is 10,000. But there is no hard and fast rule that donor should also take 10,000 as its value. Okay, 10,000 as its value. What they say? This is most common with unquoted shares. It's not talking about the quoted shares. If you are selling the shares of the company, what is the controlling shareholder from which a partial gift can be? Reducing the donor's level of control has a higher value. What they say that, see, when you are the owner, is it right? You are the owner as such. When you are the owner, is it right? If you are the shareholder, value will be different. If the ownership is transferred to others, unquoted shares. Is it right? Unquoted shares. In the examination, they will give you quoted shares or unquoted shares. If the unquoted shares are transferred to somebody else, definitely what will happen? The value will decrease mostly, or it increase. It never be same. It will never be same. Okay? Now, Linda owns 6,000 shares, which represent 60% of the holding in Loot Limited. On 31st December 2002, she gave 20% of the holding in the company to her friend Bob. Is it right? Now see the thing. They gave you this. This will be there in a section B. Okay, this type of questions are there. 2 or 3 questions are there in section B. The value of the holdings in Loot is, if you are holding up to 25%, 9, 26 to 50%, 15, 51 to 26, and 75% or more. Calculate transfer of value relating to the gift of unquoted share. See, now you see the thing. If the percentage changes, the value per share will is also changing. Yes or no?
Yes, sir.
Is that if percentage is changing, the value is also changing. How many they have hold? 6,000 shares. Okay. How many total shares are there? 60%. Okay. If you take 60%, in which bracket you will get?
26.
26. Is it right? Is it how much you'll get? 26. Now, how much they are transferring? They are transferring how much? She gave 20% of the holding. Is that, see the thing? She is having how much? She is having 60%. Okay? 60%. Now, at that point of time, what is the value of the share? Value of the share is 26. Okay? Now, after transfer, is it right? After transfer, how much she will have? She will have 40%. If the 40% is there, value of the share will be how much?
13.
How much? 15. Okay, value of the share will how much? 15. Is it right? Okay. Okay. Now, how much he is giving? She is giving how much? She is giving 20%. If you are having 20 up to 25%, the value of the share will be how much?
9.
9.
Okay.
Okay, that means definitely it will change according to the situation. Okay, according to the situation. What we have to do? We have to know what is the value of the shares of Linda. This is examination question. Okay, value of shares is how much? Value of shares in estate before transfer. Okay, value of estate before transfer. How much is the transfer? You have 6,000 shares times what is the limit? 26. It comes to how much?
156,000.
156,000. Now, is it value of shares after transfer? Is it value of shares in estate after you are writing.
I'm calculating.
When you will write,
Okay, now alright.
okay, you are doing alhamdulillah. Just you keep this momentum. Allah Kareem, inshallah you will pass. Okay, keep this momentum. Don't 4,000 shares times how much? 15. Is that what will happen? It comes to how much? It comes to 60,000. How much value has been decreased? Value has been decreased by, it is transfer of value. Is it transfer of value? This is it is diminution in value. Okay, you can say loss to Linda's estate.
Now 4,000.
How much? 4,000? Now, okay.
How do you get 4,000?
Where is 4,000? 4,000 shares. 60%. 60% is how much? How many shares? 6,000 shares. 40% will be how many shares? If 60% is 6,000 shares, 40% will be how much?
So out of 10,000.
Ah.
Yes.
Is that? This 4,000 is remaining 40% shares. Now it is clear?
Yes, this is why you transfer value.
Transfer of value. How much is the loss in Linda? How much is happening? Previously she is having 156. Now she is having only how much? 96. 40,000 shares. Four.
Diminution.
Huh?
So diminution is right.
Diminution in value.
Okay.
What is the market value of gifted shares to Bob? Market value of gifted shares to Bob. How much?
Is 9.
2,000.
Right.
2,000 shares times 9. It comes to how much? 18,000. Is it right? Now you are understanding? See, diminution in value is very important. Okay, unique with respect to it is unique to inheritance tax. Okay, fine. That's what you say. If the diminution is value is there, then you have to see donor's point of view. Donor's point of view is the value will be decreased by after transfer. The value will be how much? The value will decrease. Is it? This means anything we are taking, what we have to do? We have to take the market value. Understand?
Market value of
The shares.
okay.
Here also,
Transfer sessions.
yeah, here also they have said, now somewhere they have said, where some the transfer value bonus point of view received most common way controlling is partial gift, reducing the higher value per share than the minority which is the donee acquires. No, there is somewhere it has been mentioned that you have to take market value. Where it has been mentioned somewhere where it is the which results in transfer of the value is gracious, a bad no calculate The loss in the, however, in some circumstances that from the donor asset review from the most con. Okay, somewhere it is given. Okay, somewhere we have covered. Is it okay about this?
Okay.
Next. What is the chargeable property? All property to which person is beneficially entitled is deemed to be part of individual estate. Therefore, a gift of any asset, a transfer in value. A gift of a, see, for the purpose, read this one.
For the purpose of taxation, there is no such things as the exempt assets for the purpose, but there is exempt transfer. Exempt transfer.
Okay?
So we don't admit this exempt transfer. So we are also is same is exempt assets.
Let's see. Sabar. In next few pages they gave you exempted transfers also. Okay, just wait for a while. That is the chargeable property. Who are the chargeable person? A chargeable person for the purpose of the tax examination will always be individual. All individuals are liable to inheritance tax. An individual who is domiciled in UK is liable to inheritance tax on worldwide assets. If not UK domiciled, an individual is generally liable to UK assets only. For means if it is a UK citizen, he is going domiciled, he worldwide assets he has to pay. But if it is not a UK domicile, he has to pay only to those assets which are in UK. Okay?
But that means domain is
Means domicile means you have that conditions now. Tie 1, tie 3 ties, 4 ties.
okay.
Okay?
Yes.
3 ties, 4 ties. That is domicile.
Okay.
Now read this one.
Oh, what is the you already read it, right?
No. That you have to read this one.
Okay.
You read this one, dear.
All individuals with the UK, however, the purpose of the taxation exam, all individuals will be UK.
Okay. Note that. Is it? Note that spouses or partners is registered civil. Okay, fine. We are, see, I am telling you what is there and what is not there, okay? What will be there or what are treated as separate charges, fine. Occasion of charge. The main charge to IST arises on the death of an individual. As liability arises the value of all the net assets of individuals at the time of death. Okay? Any lifetime gifts made in the 7 years before death, they are provided they are not exempt transfers. If they are exempt transfers, you should not consider. If they are not exempt transfers, they are not. See the thing, you will have exempt transfers and you have non-exempt transfers. Okay? If exempt transfers, fine. No, we have done, but again we cannot double 2 times we cannot take the advantage. Is it right? We have to take the things with respect to non-exempt transfers only. Okay? However, an IST charge also arises on certain lifetime gifts at the date of the gift. Okay.
Okay.
Read very slowly, very important, very sensitive, very critical.
Lifetime gifts. There are three categories of lifetime gifts that can be made by the individuals. Exempt, no inheritance tax. Potential exempt transfer becomes charitable if the donor dies within 7 years of the death gifts. Charitable lifetime transfer taxed immediately and also on the death. Okay, so they're exempt, no inheritance tax, and they're also when the individual die within 7 years of the date of the gift, and also some is taxed immediately even if the individual is not died.
Yes.
Okay, types of the lifetime gift. Lifetime gifts. The definition of each type of the gifts for the purpose of the taxation exam and the overview. The way which there is taxed summarized in the text. Okay. Exempt transfer. Potential exempt charitable type life transfer. Okay. Definition of exempt transfer. The gift or transfer that is specifically deemed to the exempt from inheritance tax is available. Okay, definition of gift by the individual to another individuals. Okay. No definition. Resident category. It's the gift which is not exempted nor BET. What does it mean? BET. Potential exempt. Okay. BET is the potential exempt tax transfer for the tax examination. Okay, drawing the lifetime, no inheritance tax payable, no inheritance tax payable. It's inheritance tax calculated using the lifetime rates of the tax. If the donor leaves within 7 years, no inheritance tax payable, no inheritance tax payable, gift becomes exempt. No further. Okay. If the donor dies within 7 years, the donor leaves. Okay, the donor dies. Okay, no inheritance tax payable. Okay, the potential exempt transfer becomes charitable on the death from the first time. Stability extra inheritance tax credit is. Okay. It's important to note that the practice of the majority of lifetime transfer made by the individuals are either exempt transfer or transfer from the individuals to another making gifts. It's important to note that is in practice the majority of lifetime transfer made by the individuals is exempted or transferred from the one individuals to another. Making gifts in total is completely area in practice.
Complicated area.
Complicated area in practice, but the tax examination all gifts in two trustees will be treated as the CLT. What that mean? Charitable lifetime transfer. Charitable lifetime transfer. So only the charitable lifetime transfer is for the trustees.
Yes.
And some is exempt transfer and some is transfer from the individuals to another. It's potential exempted transfer. Those three categories.
Yes, three categories. You have to be little bit careful here. This is very important. You have to, okay, you have to understand first this. What is exempt transfer, what is potential exempt transfer, and what is the chargeable CLT.
Now we know that is CLT and potential, but how about the exempted?
Sabar, next, they have made, see the thing. See the thing. A CLT is a gift that is not exempted and not potentially exempted. They are not common in practice. They are not every time it happens, but appear in examination question because they are chargeable to IST at the time of gift. In the tax, CLT will always be lifetime transfer by an individual into trust. Is it in the tax? CLT will always be when we are talking about CLT, it is a lifetime transfer by individual into a trust. Is it right? Keep this in mind. Okay, keep this in mind. It makes sense. Okay. What is that? Are you clear about this?
Yes.
Any doubt? Read twice. Okay, so that is the thing which we have learned. A trust. What is the trust?
It's agreement with the property of the trust. Yes. Trust is the agreement where the property, the trust assets or the certain property is transferred by the person or the settlor to the trust.
Settler.
Settler.
Hmm.
Settler.
Settler.
Trust is to be held with the benefits of one or more specific persons know the beneficiaries on the terms specific terms. So it's the person who manage that property.
Yeah, simple. That's all.
When he, yes.
The most common example of a trust is where parents wish to give assets to their children, but not until they are adults. The parent therefore put the assets into a trust with the children as beneficiaries, and the assets are controlled by trustees until the children reach a specific age. It is not necessary to understand the workings of trust for the tax exemption, only to learn that gifts to trust are chargeable lifetime. What we have to understand? We should understand only to learn that gift to trust are CLTs.
Yes.
Don't think about trust, what they do, what they didn't do. That is not our job.
Okay. Potential exempt transfer. Potential exempt transfer have the private name from the fact that if the donor lives for the 7 years after making the gift, then the transfer is exempt, free from the inheritance tax. Therefore, the time of transfer it has the potential to be exempt. However, if the donor is died within 7 years of making the gift, then the inheritance tax may become the chargeable in that gift. Note that transfers on the death can never be potential. Note that transfers on the death.
Transfers when you are alive, when the person is alive, then only potential exempt. You cannot say that once the person is died, then you cannot say that you can claim potentially exempt transfer.
It should be before he gives.
He should be alive.
Before he died.
Before he died. Before he died.
And if they give it before he died, it's not possible, right?
Again,
If they give the gift after he died, it's not possible.
no.
Okay.
Okay?
Okay.
Now, now you are asking now what are the exempt transfers? Simple. Okay? The following term is the exempt transfers and reliefs for IHT that are examinable, means this will be tested in exam. Understand point? This will be tested in exam. Exempt transfer and reliefs. Okay? Small gifts exemption, marriage exemption, normal expenditure out of income exemption, annual exemptions, inter-spouse exemptions, which also applies to registered civil partners. Okay? Exemptions are available for lifetime gifts only. The following exemptions are available to reduce lifetime. Do not apply to the death estate. Is that this will not apply to the death estate? Understand my point? Note that the rules and limits to these exemptions are not included in tax rates and allowances provided. The rules will not be given in the examination. Okay, now
Rules what?
all these rules will not be given in the examinations. Okay, the table, all these things, we have to memorize it. Okay, read this.
Now those is the exempt transfers.
Yes, see,
Small gift, how decide this small gift or not?
read this. It has been given here. See the thing. Small gifts exemptions. Lifetime gifts are exempt if they are not more than how much? 250 per recipient per tax year. Means you can give gift to how much? Maximum 1 to 250 to one person in 1 year. That's all. Not more than that. Is that the small gift exemption does not apply if the gift is more than 250. Therefore, a gift if 300 does not qualify. If the gift is you are giving one time 240 and another time you are giving 100 again to the same person, it is the gift is neither gift is exempt, no exemption. Means it is crossing 250.
Will be applicable to the tax.
Yes.
More than 250.
Yes, more than 250 tax. The donor can make the gifts up to 250 to any number of different. Means you can give 250 to 100 people, to 1000 people you can give, but it should not cross one individual 1 year more than 250.
Yes. Okay.
Okay. Now, similarly, see, this will be done once we do the practice. Okay. By the time once we complete the chapter, you will become perfect on that, inshallah. A lifetime transfer made in consideration of marriage, registration, partnership is exempt maximum. See, 5,000 by parent, 2,500 by grandparent or remote ancestor, 2,500 to the marriage or civil exam from the groom, means you can give spouse, okay, and 1,000 by anyone else. The exemption is conditional on the marriage taking place.
When the marriage is happening.
Understand?
So this is now they give this amount or what?
This is the gift you can give. 5,000 a parent can give to their son or daughter. Okay, 2,500 is exemption. Okay, 2,500 by spouse to husband to wife, wife to husband. 1,000 by anyone else. This amount is exempted. Exempt items.
If that amount is more,
Taxable.
Not exempted.
Not exempted.
By the parent.
Anybody else. Anyone.
Give it 5,000 by the parent to give it to whom? To children?
Yes. Otherwise, to whom they will give? Parent means children only now.
Maybe nephews.
No nephews, no niece, nothing. No grand. It has here now any grandparent or remote ancestor. How much? 2,500. Then you can, as a grandparent, you can give to grandchildren, nephews, niece, whoever it is there.
Okay. And this is when they're married?
Taking place.
Married taking place. What does that
means the date of marriage. Is it right? Means the marriage should take place. Otherwise, you will say that marriage is there are so many things, my dear. You understand now? People can manipulate anything. Okay, but they will not ask to this extent. Okay, they will not ask to this extent. Next, another interesting thing. IST is levied on transfers of capital wealth. There is a lifetime transfer is exempted if it is shown that the gift is made as part of person's normal expenditure. Is that you can lifetime transfer is exempt. A normal exempt. Every year you will give. Every month you are giving. Okay, maintenance for expenses. Then it is exempted. Does not affect the donor stand. Means you are giving any gift is not affecting your personal living expenses. What it says, just read this one.
To be treated as the normal, gifts must be habitual. There is a regular pattern of the giving. For example, payment of the school fees for the grandchild, or the annual payment into the life insurance policy, or the benefits of the child are usually exempted under this rule. To be treated as normal, there must be habitual. What does it have to?
Okay. Now, this is very important. Very, very, very important. Annual exemptions. The annual exemption is exemption available for against lifetime transfers. And now, how much is the annual exemption? First 300. Lifetime transfer, any one tax year. It applies chronologically to the first gift in the tax year, then if any left, it is sent second gift and so on. Means date wise. Okay, it applies date wise. Must be applied to the first gift each year. Even the first gift is potential exempt transfer, never becomes chargeable. Is it? It applies to the first gift of each year. Is it right? Whenever you are going to make it a point. An unused annual exemption. If you are not using annual exemption or any balanced exemption, balance may be carried forward to next year. It can be carried forward for only for 1 year only. It can only be used after the current year annual exemption. Is it right? The maximum annual exemption in 1 year is therefore how much? 6,000. 3,000 into 2. It means if you are not using annual exemption, you can carry forward for the next year only. And in any year, what is the annual exemption? Current year 3,000, previous year 3,000. If other exemptions are available, they are given before annual exemptions. Okay? Next.
The Moran is made the following lifetime gifts. In 31 30 October 2020, 800 to trust. To trust is no limit, right? Okay. In May 21, 2100 to the trust, also is no limit. November 2021, 1100 to the trust. April 5000 to her grant is not exempt. Yeah. Yes. Is not exempt, only exempt 1500. Yes, are you with me?
Next, what? First to identify. You are giving, see you how much is there, you can avail how much? 3000 and 3000. 2020, 2021. Okay, 2020, 2021 and 2022. Fine, you can. Now, if we are giving, okay, if we are giving to the sun, what will happen?
Is under the limit 5000,
Okay,
so is exempted.
under the limit, what? See,
5000 limit, right?
no, it is, see, what it says, what annual exemption available for lifetime transfers. How much is 3000 in any one tax year? Apply chronologically to the gift in the tax year. Must be applied to the first gift each year. Even the first gift is potential exempt transfer and never becomes chargeable. Is it potential exempt transfer? And see what is the amount to 6000 to her son?
6000.
600, sorry, 600 to her son. It is chargeable or exempted, or it is potential exempted.
Huh?
It is exempt, okay, it is exempt, or it is potential exempt transfer, or it is chargeable lifetime transfer.
Is exempt
Why?
because under 5000.
Under 5000 marriage, he is giving for marriage.
Marriage of the items for marriage of home.
Why he is giving? He is giving, see, he is giving, he is Maron made a lifetime gifts. It is for marriage they have given? No.
Okay, so that only for the marriage.
Is it right? That 5000 is only for marriage.
So it's potential exempt.
Ah. It is potential exempt transfer.
But we need to now to consider that death happened within 7 years or not.
We will see that. We will see. They will give you. If they give anything, then we will see what will happen. Okay? They will mention everything. Everything they will mention. Trust.
Trust is that is CLT.
CLT. And the second one, trust.
Also CLT.
Another one, trust.
Also CLT.
They have given 5000 to her daughter.
It's potential. PET.
Calculate chargeable amount after annual exemptions. After annual exemptions. After annual for each of the gifts. Is it right? For each of the gifts. Is it right? Now, first what is there? They have said they have given potential exempt transfer. Is it right? When they have given it, they have given on 31st August 2020. Is it right? 2020. Tax year will be what? Tax year will be?
Next year is from April to April.
2020 to 2021. Okay, this is the tax year. This is the tax year of the gift. Okay, tax year of gift. Next, Next, what is CLT? When they gave CLT, 31, 10, 20, 20. Okay. Tax year will be how much? Tax year will be 20, 20, 21. Okay. Next. CLT is how much? Third one. 31st May 2021. Tax year will be
Tax year 20 to 21.
21, 22.
21, 22.
CLT is how much? Tell me.
Yes. 21, 22.
30th November 21. Okay, 30th November. Tax year will be how much? 20, 21, 22. Okay.
February 22.
Potential exempt transfer. How much is it? 30th April 2022. Tax year will be
First April, so will be 22 to 23.
annual exemption. Is it right? Annual exemption. How much is that? How much is that? Sorry. How much is that transfer in gift? Transfer of value is how much?
600.
Transfer of value is how much? 600. Is it right? Transfer of value is how much? 800. Transfer of value is 2100. Transfer of value is 1100. And transfer of value is how much? 5000. Okay? Fine?
Yes.
Next. How much exemption? Annual exemption is how much? 3000. Okay? 3000. See here 600. 20, 20, 21. Okay? 20, 20, 21. 600. Here how much?
800.
Here how much?
Now 3,000 is given for the 1 year or for the each transfer.
1 year. One chronological order. Chronological order. Chronological order. First gift in the tax year. Second gift in the tax year. Date wise. Chronological means date wise.
First gift.
Yeah.
First we take the first gift and then the second gift.
Yes.
Until they finish.
Yes. Okay. Until they finish. And first you have to apply. First must be applied to the first gift, even if the first gift is a potential exempt transfer. What they say, maybe carry forward for the next year. However, it can be carried forward for 1 year only, and it can be used. It can only be used after current year exemption. Understand point?
Yes.
After current year exemption. This is for which one? This is for which year? It is for 2020 and 21. Okay, annual exemption 3000. Is it 20, 21, 22? Okay, first we have to use 2100. Okay, first you have to use 2100. How much is left over?
Now what was the current year?
Current, see, first you have to use current year. Okay, first you have to use current. Now how much is left over here? 600 plus 800. 1400 is over.
Yes.
3000 minus 1400. How much is left here? It is there 1600. Okay, you can carry only for 1 year, that's all. Okay, you can carry only for 1 year. Now, okay, still 6. First you have to use current year. We have used current year how much? Current year is 3000. 2100 we have used. Balance is how much? Balance is how much? 900. Okay?
So full will use.
Yes. Plus, we can, last year balance is how much? 1600 is there. Is it right? 1600 is there. We can use how much last year? Annual exemption balance 2021, 2020 and 21. How much we can use? 200. Now it is closed. We have used 200. Whatever is left over, we cannot carry forward. No carry forward.
Now question is,
Huh.
how do we know that the current year 21?
See, now how you know the current year 21? First you have to use current year. See, you see I am left hand side, you see, can only be used after current year annual exemption.
Okay, but I'm asking why you choose that 21, 22 is current year? It's not mentioned in the question. It doesn't say that is current year is 21, 22.
No, see the thing. This is which tax year it is?
22, 21.
2021. This is which tax year it is?
21, 22.
21, 22. This is different tax year, this is different tax year.
Yes.
If you are using 21, 22 means that is the current year. Is it? This is the previous year, this is the current year. Now if you come back to this 22, 23, then 22, 23 will become current year. See my dear, is it? If you are doing this, this will become a current year.
Yes.
If you are doing this, then this will become a current year. If you are doing this, then this will become a current year.
Yeah, and forward only the next year.
Carry forward only to the next year. Anything is there? No carry forward.
Yes.
Okay? Now, annual exemption, which year? 22, 22, 23. How much is there? We can take maximum how much?
3,000.
3000. 2000 is how much? Tax. Are you clear about this?
Yes.
Chargeable amount. Very important here. And very easy also. When I am saying easy, it is easy. Inshallah. Fine?
Okay.
See the things. Is it? Test your understanding 3. We will do this and we'll stop, okay?
Okay.
Now, revise it. Okay? Transfer between spouses or between partners in registered civil marriage partnerships are exempt regardless of the value of the transfer. Is it right? Spouse exemption. Transfer between spouse or between partners in a registered civil partnership are exempt regardless of the value of the transfer, whether they made during the lifetime or they have made on the donor's death. This condition applies to only this condition applied to the spouse and registered civil partners. Okay. Now, Philby made the following lifetime transfer. Unquoted shares.
Okay.
What is this?
5 to 5
In a family company to his husband. How much is it right?
Yes.
Is it right? When they have done 1st June, okay, 1st June, it is gift to husband. It is exempted.
Okay.
Any value.
Second one, they give 15,000 to his son
Huh.
for the wedding present. Okay. So now the limit is 5,000 is exempt. That means if more than 5,000 is not exempt. That means we take the excess for 5,000.
Now
We take the full 15,000.
we will take the full 15,000. See the thing. We will take the full 15,000. From 15,000 we will deduct 5,000 as the gift to the son on marriage. Then we will have annual exemption. You will have the annual exemption of previous year 3,000 plus you have the annual exemption of current year 3,000.
So also the exempt shares
Huh.
will be there annually given.
Pardon?
There 3,000 also is available for the which year this? No.
Sabar. Is it right? One minute. Okay. Exempt gifts. Is it right? Exempt gifts. Is it right? Exempt gifts. Is that 1/6/2022? Okay. Gift to husband. Is that exempt? Okay, exempt. Enters what is it as? Okay, next. Next, what is there? Fine. Next. What is exempted? Anything is there? 20,000 to the nephew. Fine. We'll see. 235 less than 250. You know that rule? Less than 250.
Yes.
Is it right? When it is there?
Small.
4th November 2022. Is it right? Gift to friend. Less than 250. Exempt. Okay, this is exempted and this is exempted. Fine. This is exempted and this is exempted. This is exempted and this is exempted. Now, okay, now remaining gifts. Is it chargeable amount? Now, what is there? 15,000 to his son, wedding present, to 20,000 to his nephew, and 270,000 into the. This is what? This is chargeable lifetime transfer, CLT. Trust is CLT, is it right?
Yes.
And this is potential exempt transfer, and this is also potential exempt transfer. Okay.
Nephew also.
Nephew also potential exempt transfer. Okay. Next. Are you clear about this? Now, first you have to take potential exempt transfer. Date of, you have to put 6th July 2022. Potential exempt transfer 27th September 2022. Okay. And CLT. CLT what date? 24 December 2022. Okay. Now, tax year. What is the tax year?
Is here
2022 23 2022 23 2022 23. Okay, next, transfer in value, transfer of value, how much? 15,000s, 20,000s and 270,000s. Nephew, okay, to his nephew. Why they are giving nephew? Nephew, it is chargeable or not chargeable? Nothing is there, nephew. Okay. Less marriage. Marriage exemption. How much is marriage exemption? 5,000. Here no, here no. Less. Annual exemption. Is it right? 2022 23. First you have to take current year. Okay. Then you have to take the previous year. Understand my point?
Yes.
And it is date wise, you cannot jump. Okay, you cannot jump. Now you don't have any annual transfer exemption here, you don't have any annual exemption here, you don't have any annual exemption here, you don't have any annual exemption. You have to put zeros. Okay, you have to put zeros. How much you will get? 15 minus 5, 10, 10 minus, it comes to 4,000s. It comes to how much? 20,000s. It comes to how much? 270,000s.
Why it now annual exempted two times?
First you have to take current year, then you have to take previous year balance.
From where you get the balance from previous year?
If they have not mentioned, means we have not used previous year balance. Is it right? If they have not mentioned, means we are eligible to take previous. They have said anything about previous year balance?
No.
Carry forward can be taken only for the next 1 year. Is it right?
Yes, but maybe that's happening in this year only. They're not having the previous year.
Huh?
Maybe it doesn't happen anything in the previous year. So from where you got that limit?
Whatever is there, if they have used previous year, they will mention previous year. Is it right? See the things. If they have mentioned in the previous case, what we have done? We have taken 600 and 800. We don't have anything more than that. Okay? Because if it is even previous year we will take, there is no scope of taking previous year because the limit is less. Okay? Limit is less. Here what they have mentioned anything about previous year, that they have used any balances, chargeable amount for which of the lifetime gift. Now what you are asking is right. If not mentioned the previous year annual exemption can be used after current year annual exemption amount.
So we'll use
Previous
year. If they mention, we'll use 3,000.
Yes. Is it okay? Is it okay? This is the chargeable amount.